Last week, U.S. markets navigated a landscape defined by a major leadership transition at the Federal Reserve and a pivotal Magnificent Seven earnings cycle. While the S&P 500 managed a slight weekly gain, it was a tale of two markets: record highs midweek followed by a sharp Friday retreat as traders processed the nomination of Kevin Warsh as the next Fed chair. Warsh is viewed as more hawkish than Jerome Powell, prompting a sudden spike in the U.S. dollar and a dramatic 9% plunge in gold prices from record highs. Growth sectors remained polarized. Meta buoyed the tech-heavy indices with strong results, whereas Microsoft faced pressure over heavy AI capital expenditure. Small caps through the Russell 2000 showed signs of life as investors rotated away from over-concentrated mega caps, though this broadening remains fragile against rising treasury yields. 11 S&P 500 sectors, key drivers. Last week, technology, AI spending skepticism versus strong software earnings from meta platforms. Financials, higher yields in anticipation of less dovish Fed leadership. Healthcare, underperformance in Medicare-linked names due to flat payment reports. Communication services, Meta's earnings beat drove significant outperformance within the sector. Consumer discretionary, sentiment weighed down by rising credit costs and labor cooling. Consumer staples, defensive rotation slowed as investors favored cyclical recovery plays. Energy, volatility in natural gas prices due to U.S. cold weather. Industrials, manufacturing PMI uptick signaled stabilizing demand in core production. Materials, sharp correction in mining stocks following the precious metals sell-off. Real estate, high treasury yields continued to suppress right valuation recovery. Utilities, defensive positioning softened amid a shift toward growth-oriented sectors. Global condition and news, week of February 2nd. The global focus shifts to a central bank triple header, ECB, BOE, and RBA, and the U.S. January jobs report. European and UK markets are cautious as inflation remains sticky, while Japan monitors yen volatility following the U.S. Fed nomination. China's PMI data remains under the microscope for signs of stimulus-driven recovery. Expected stocks to move up. Exchange, U.S., NYSE/NASDAQ, Amazon. Strong AWS growth and retail efficiency expected in quarterly results. Alphabet, AI integration into search and YouTube ad revenue remains resilient. UK, LSE, Shell. High energy demand and share buyback momentum supporting price growth. HSBC, beneficiary of prolonged high interest rates and Asian expansion strategy. Europe, Euronext. ASML, increasing demand for lithography machines as chip manufacturing expands globally. LVMH, resilient luxury demand and potential recovery in Chinese consumer spending. Japan, TSE, Toyota. Weak yen and strong hybrid sales driving record earnings forecasts. MAFC, rising domestic yields improving net interest margins for major banks. Market trends and news ahead. Trends, US, UK, EU, JP. US markets focus on labor data. UK/EU face stagnant growth and central bank pauses. Japan benefits from corporate governance reforms and Sanaeonomics pro-growth policies. Here at the stock market performance playlist is this week's stock terminology learner. What is Sanaeonomics? Sanaeonomics is a term derived from the Japanese PM Sanae. It represents a specific brand of fiscal policy. Key pillars include strategic investment, crisis management, and monetary easing. Anticipated news, the U.S. non-farm payrolls, February 6th, will dictate Fed rate expectations. ECB and BOE rate decisions, February 5th, are expected to hold steady but offer hawkish guidance. Alphabet and Amazon earnings will test AI sentiment, while China's PMIs provide insight into global demand. The U.S. Treasury's refunding announcement will influence long-term bond yields and market liquidity. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the stock market performance playlist, the sound of victory. Peace.